All right. Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco and my co-host, Hari.
Hello.
Welcome to our podcast. So, in this episode, we are going to talk about again, a take on the macro picture, especially inflation and sort of broader money supply. And then we'll also talk about that with GameStop and what happened with GameStop and Reddit and Robinhood, all of those, the whole saga that took place a few weeks ago. So we'll talk about that, what that means for us. Before we start, Hari, could you start us off with a disclaimer?
Yeah, and this is the Value Investor TV podcast. We're a podcast that helps you understand the concepts behind value investing. We are not advisors. We don't know your specific financial situation, nor do we know the tax implications of any decisions you're making. So please consult with the appropriate advisor before making any financial decisions.
Great. Awesome. So let's start off with the inflation. So Hari, in the last episode we talked about stimulus.
Yep.
And this new round of stimulus check that's about to be delivered, stimulus bill that's about to be delivered, and probably signed and passed. And so, with that in mind, inflation is the name of the game. What does that mean for us as investors in the stock market?
Yeah, so I think many of us have not really experienced the kind of inflation that we saw in the late 70s, early 80s, right? And that level of inflation, you had interest rates that were really high, 9, 10%. And you also had inflation. And this is effectively just leads to very slow growth and, other things. But by itself, inflation, what it does is it essentially destroys your purchasing power, right? So the value of your dollar goes down. You're not able to buy or afford things that you could. So the way it hurts you as an investor is, you may need more money, in absolute dollars to cover your retirement expenses and things like that. So if you're going to be spending $50K in retirement, now you may need $75K, and you multiply that over 20 years, and that adds up to a lot of money, right? So, the idea here is that when what causes the inflation is a big increase in the money supply is traditionally what can cause that, right? And so this actually, going back to ancient times, the Roman Empire actually, what they did was they had gold coins that they started, instead of using the weight of gold, they actually started putting trace metals in there to replace the weight of the gold, and then essentially diluted the value of their and then printed more of these by making more of them. So they had a fixed amount of gold, but they kept adding other metals to it. The way we do that now is by essentially creating stimulus money out of nothing, right? So when we raise $1.9 trillion, right, the Fed actually just creates that money out of thin air. And, we've done this already with a large stimulus in May. We're doing it again with $1.9 trillion. The federal government already owes $30 trillion. And by the federal government, I mean everybody who's a citizen of the United States owes $30 trillion. So as you continue to do this, there is more and more supply of currency. That means the purchasing power of that currency, decreases. So
I want to preface. I'd like to kind of add more color to that.
Yeah.
Which is that inflation. You might think that, oh, look, I go to Starbucks every day and my coffee is still $5.
Yeah.
It was always $5. It'll always be $5. You could say that, and I'm not experiencing any inflation. You could also be saying, I'm trying to buy a real estate in San Francisco, which I currently live in, and my price and the price of any housing in San Francisco has been through the roof, despite COVID, despite all these things. It's going through the roof, and so it really depends on what you measure as an inflation. Like what is your desired goods and services that you want to acquire, and then think about that, and think about how much price the price of those things inflating. And so it sort of depends on your perspective, but broadly speaking, it's the purchasing power of a single dollar and how far it can take you. And especially for those who are saying that I'm not really experiencing inflation, you have to look at limited supply of things that are precious, meaning these are things that people want. Those have been going up, the whole time. Like, property in New York City, property in San Francisco, those are real estates. Property, piece of ownership of a company, namely stocks, have been going up quite a bit. So asset
Yep.
inflation. So so that's I just wanted to add some color to that.
Well, and
Yeah.
and one of those also is wage inflation, right? So you're seeing a push by the Democratic Party to push for $15 an hour minimum wage, and in some cities they've actually done that. Well, so what is the actual outcome of that? Well, so if a business is currently paying people $10 an hour, or let's just say for simple terms, they're paying them $10 a day, and they have $100 in expenses of labor expenses, and now you increase it to 15, right? So you go from being able to hire 10 people to being able to hire 6 people, right? So you have two options in that scenario. You fire those people, which a lot of businesses do, and you saw this when Seattle and California, places in California raised their minimum wage. There was unemployment, significant unemployment. But the other thing that businesses do is they have to raise their prices, right? So what you're doing is essentially you're not creating any new value by raising the minimum wage, right? So this is economics 101. They talk about this stuff, but when you raise the wage like that, but you're not actually creating new value out of it, right? So when Apple makes a new device, right? Think about all of the people who are employed now that weren't employed 15 years ago, right? People who are making apps in the App Store, people on YouTube who are streaming, stuff on the phone and stuff like that. When you raise prices without doing anything else, the end result of it is, or I'm sorry, when you raise wages, prices will have to go up, right? And fewer people will be able to work as a result of that. And I'll give you a great example of that. We go out to lunch, breakfast on the weekends. And when my daughter was, about 8 years ago, the bill would be about $25. So I went to the same place that I've been going to for 8 years, and that same bill for the same meal that I always get is now $44, right? So that is a combination of under Trump, the labor market got very, very tight. And as a result of that, wages went up. And so a lot more people under Trump saw bigger increases in their wage than they did under Obama. When you force the hand of the market by increasing the minimum wage, you will effectively destroy price discrimination, right? So now we have large amounts of unemployment. If you try and force a minimum wage, you're going to just increase more unemployment because people can't go to work at this point, right? And now there's lots of small businesses that can't even employ them. So what I'm getting at here is we have to be real careful because inflation can actually destroy our economy very, very quickly, right? If we start doing wage inflation and other, aspects, the only thing that can happen is price inflation, right?
Yeah, exactly. To your point about the last point there, like inflation can really destroy the economy, and I think it's even more so for people who are lower middle class,
Yeah.
right? People of lower middle class, their earning power will be completely burned away in a few years' time,
Right.
right? And so, and then on top of that, you're adding fuel to the fire with stimulus checks and all these other things that are happening in the market.
Yep.
And so it's just going to do a lot more damage than good if you don't think through these problems
Yep.
in a rational way. So I think that's something that not just as an investor, but people as a citizen of today's economy, and we just need to be mindful of these issues. So I think that sort of wraps it up for inflation topic. Let's shift gears here and talk about GameStop.
Yeah, let's actually cover that in the next episode because I think there's enough meat there to do it in its own separate segment. So let's separate it
Okay.
out.
Anything you want to add on the inflation topic then?
No, I think we just have to be very careful about this. And it is something that if you are holding cash at this point, right? Think about it this way: the value of your cash is not going to increase, right? And so in some ways, putting it into the market is actually a good hedge against inflation because the market will, in some ways, automatically price for inflation, right? In other
I mean,
ways, it won't.
that's exact. Yeah, I mean that's precisely why you have this flood of capital coming into the market and
Correct.
driving up the price of the stocks.
Yep.
Right. That's precisely why. So, and as well as things like Bitcoin, which we'll talk about in a later episode.
Yep. Yep.
Awesome. All right. Thanks for listening, guys, and see you in the next episode.
Yep. Thanks.
Bye.